Hello, welcome to European Open Briefing for Tuesday, September 25th. I'm Rafi Barajan, currency analyst at xm.com, and we're going to be having a look at what's happening in the currency markets today. The US dollar is broadly steady this morning as the Federal Reserve is due to start its two-day policy meeting later today. Against the Japanese yen, though, the dollar is marginally higher. It earlier came very close to touching the 113 level. The yen is broadly weaker despite risk appetite still not doing too well since yesterday when we saw a turnaround from the end of last week. Last week, of course, we saw a big rebound in risk sentiment, but this week once again we've got renewed concerns about trade tensions between the US and China and the potential impact on global growth. Japanese stocks were boosted by the weaker yen, but we can see it's pretty mixed in other markets, especially in Asia, though Chinese markets are still closed today for a holiday. In Europe, though, we can see main indices moving slightly higher. The euro yesterday got a big boost. It surged to a more than 3 months high after ECB President Mario Draghi sounded unexpectedly hawkish on the Eurozone inflation outlook. And in the UK, the pound also got a bit of a boost, helping it recoup some of its sharp losses from last week following that EU summit when there was a major setback in the talks. The UK Brexit Secretary Dominic Raab did say that he's still confident that a deal will eventually be reached. But if you look at the risk-sensitive currencies, the Aussie and the Kiwi both down against their US counterparts amid the revived fears of a prolonged trade war between the US and China. The Aussie currently trading around 0.7245 at the moment. The loonie also slightly lower. The loonie hasn't been able to get much of a lift from higher oil prices, and oil prices continue to rally. WTI has crossed above the $72 a barrel level, and Brent crude has hit a fresh 4 months high. This comes after the OPEC meeting over the weekend, when OPEC and other major producers said that they're not planning on increasing output to offset falling supply from Iran, as we've got those US sanctions due to come into effect in November. If you look at gold prices, it's marginally higher, just below the $1,200 a level. And if you look at the main performers, we can see euro yen being the biggest gainer this morning, followed by euro dollar and oil prices at the bottom. Aussie dollar falling on the back of that ongoing risk of sentiment. And looking at the dollar yen pair, we can see the pair is trading just below the 113 level. Dollar index is a bit more mixed. So the Fed starts its two-day policy meeting. We're going to get the announcement tomorrow. We're also going to have the updated forecasts and press conference by Fed Chair Jerome Powell. So it's almost certain that we're going to get a rate hike tomorrow and another one before the end of the year. But it's going to be interesting to see what the outlook for 2019 is going to be, given the trade tensions, and now we're seeing higher oil prices as well, how the Fed will want to balance those two out. There's a bit of political uncertainty as well in the United States. The Deputy Attorney General, who's overseeing the investigation into the Russian election meddling, has come under fire by Republicans, and he's due to meet President Trump on Thursday. We could possibly see his resignation, and that would trigger a fresh turmoil in the United States, as it could put into doubt that the investigation still being carried out by the special counsel appointed to take care of that, and also President Trump. It would also raise questions about President Trump's intentions. Quick look now at the euro. We can see the single currency spiked to 3.5 months high, $1.1815. Yesterday, President Draghi, speaking before the European Parliament, said that underlying inflation in the euro area is picking up relatively vigorously. So that was unexpectedly a much stronger language than we'd heard from Draghi. So that's why we saw quite a strong reaction in currency markets. But later on, he did reiterate the ECB's forward guidance that interest rates will likely stay at current levels through the summer of 2019, and we saw a bit of a pullback in the euro, and it's now trading around the 1.1750 level. And finally, having a quick look at the Aussie, we can see that decent rebound until the end of last week when it recovered to 3-week high of 0.73 dollars. And since Monday, though, it's been drifting lower amid doubts about whether or not China and the US will be able to resolve their trade dispute. China, of course, yesterday we heard that they cancelled their planned trade talks with the US, and we heard more remarks this morning with Chinese officials saying that China cannot start talks with the US when the administration there is putting a knife to China's neck. We're seeing the Aussie drift lower to around 0.7245. And looking at what's coming up later on, the main focus will be on the US Consumer Confidence Index. That's it from me. Thank you very much for watching, and have a great day.